Monday, August 23rd, 2021, Monaco 64, home of alternative economics and contrarian views. Today we're going to look at how the major central banks like the Fed, the ECB, the BOJ, and the People's Bank of China cannot afford to stop increasing their balance sheets or adding reserves to their banking systems, or doing QE, because that's what it is, or printing reserves out of thin air. You could call it money, of course. That's what most people call it. And all the talk of tapering is just talk. They will not be able to afford to do that anytime soon. They could try, but it will bring the financial markets down very sharply, I would say, and then they'd have to come back and start again. And I think people will start to realize that they will never be able to stop this because they've gone too far. And that's what the crack-up boom is all about. That's what hyperinflation is all about. Right now, there's not enough people out there who believe in that, like me or some others, that the central banks are cornered, and that the only way for them to keep going is to keep inflating. Of course, that's what they did back in France in the 1790s. The assignats were just supposed to be a one-off, but they couldn't stop it. And then after about 6 or 7 years, everything imploded, the currency collapsed. People were left with no money or currency. And that's very serious. In a way, that's also a blessing in disguise, because it means the people running the show don't have any financing. And I think it's a good thing. It will feel very bad, of course, for those out there who haven't been listening to me or others trying to warn about that. And there are some kinds of money that will survive, and I don't have to probably say it to you again, but I will for the new viewers. That's physical gold and silver. And of course, in a hyperinflation, you need a lot more than just money. You need peace with yourself. You need mental toughness. You need friends. You need to be part of a community, a tight-knit community, to help each other out as well. So what I'm going to do here is show you some new data from Edward Yardeni. It's free online. It's yardeni.com. I'm going to put a link to it below the description. And he goes through central banks' monthly balance sheets. This is for August 20th, 2021. So it looks like it's the most recent one. And he keeps data and shows graphs on the major central banks' balance sheets, or total assets of major central banks. And as you can see here, the Fed, the ECB, the BOJ, and the People's Bank of China, they're continuing to add on to their balance sheets. They've reached almost $31 trillion of total assets. It's going through the roof, as you can see. So here we've got major central banks, total assets of Fed, ECB, BOJ, and PBOC, yearly percentage change. Yes, it has come off from almost 50% per annum increase last year. It's now around 19.3. And here's the other one, not including the People's Bank of China, just the Fed, ECB, and BOJ. That's dropped to 18.3%. The other one, the other chart or graph I wanted to show you, and it shows why they can't afford to stop this madness, this modern experiment in hyperinflation, on the road to hyperinflation, is this S&P 500 and assets of major central banks. They try to taper and stop from 2017 to 2019, and that's what the stock market did. It topped, and it was going to crash last year, as we see here, and they had to start again. So that's why I say it's inflate or die, as Richard Russell once said. So to sum up, any talk of tapering by central bankers is just talk. Yes, they might even try tapering a little bit, but it will be very short-lived. And I think we're going to continue seeing financial repression. And what is that? Well, that's when you have prices rising at 3, 5, 6, or even 7%, and central bankers keeping short-term rates at 0 or negative. It's basically extracting wealth from investors because they're investing in bonds that are either negative yielding, like in Europe, or yielding very little, like in the US, 1 or less than 2%. And their capital is being chipped away and debased. One day they will wake up and they'll start selling those bonds. Right now, and then everything's going to hit the fan, and the QE will probably be even bigger, but they won't be able to QE fast enough to keep bond yields down. Right now, everything is still calm for the central bankers, but the flip side of repression is that the currency that you hold, the fiat currency that you might have, spare fiat currency savings, it's going to lose more and more of its value. And that's why I am patient. Yes, I don't have all the time in the world. Time is limited. But at age 56, I still think it's important to keep part of my savings in real money, because I think things are going to get a lot worse. And as I said, when we do have the loss of confidence or the crack up boom or hyperinflation, there will be no paper money around. It will be worthless. Yes, it will be around, but you're going to need a lot of it to buy a loaf of bread. So with that, let's quickly look at where the markets are this morning. It's 8:22 a.m. London time. We've got spot gold at 1784.80. That's up just over $4. Range has been 1789 to 1776. We've got spot silver at 23.20. That's up 17 cents. Or 0.75%. High's been 23.32, low 22.96. The Dow is up 130, or 1/3%. Nasdaq is up 1/3 as well, and S&P future 500 futures up 1/3. The FTSE is up 2/3%, or 50 points, at 71.30. The currencies, we got sterling up 1/10 at 136.30. The euro is up slightly as well at 117.07. Dollar's up 0.2% versus the yen, right around 110. And the dollar's down slightly versus the yuan at 649.60. To the other currencies here, Aussie dollar is up 0.2%, 71.50. The dollar is down 0.4 versus the Canadian dollar at 127.70. The Kiwi dollar is unchanged at 68.33. We've got WTI crude actually up 2% at 63.32. High grade copper up 0.4% at 4.14. The 10-year yield is unchanged at 1.27%. Yeah, before I finish, just go through some of the geopolitical headlines with what's going on in Afghanistan. It looks like the G7, under the leadership of Boris Johnson, wants the US to stay in Afghanistan for a bit longer. I'm not sure what's going on there. They're of course trying to bring in China and Russia. I spoke about that in my video yesterday. I did a video yesterday morning, which I usually don't on a Sunday. So And I've said a few times, this is not a good sign for the Western alliance. I think there's a lot of division there between the US, the UK, and other major NATO countries. Yeah, and I would try to avoid getting too emotional or watching too much of what's going on in Afghanistan. I think there's a lot that's going on behind the scenes that we don't know, and listening to the mainstream and what they say is not a good thing. So, in my opinion, what we need to know is that, yeah, the powers that be, the globalists, they're having trouble doing things together. They're breaking apart their leadership. And I think that's a good thing for us minions. It's bad for them. So that is actually encouraging. It sounds it sounds contradictory that I would say the mayhem going on in Afghanistan is encouraging for us, the general public. I know it's not nice for the people who have been caught there, people especially from the US or the UK, and also, of course, for the people of Afghanistan, what's going on there is not pleasant. But yes, try to stay above all the mayhem. Try to focus on yourself, your family, and what you need to do to survive through these crazy times, I would say. And hold on to your gold and silver if you can, if you have any, and if you don't think it's useful, that's your opinion. I'm not here to try to convince people about anything. I'm just talking about what I think. So with that, I'm going to say take care. And also, if you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on Rumble, Twitter, Facebook, and all these other platforms below here. I wish you all a great day.